back at PDAC 2020. Very happy to be here. I'm so excited to have Byron King of the Whiskey and Gunpowder newsletter by Agora Financial. Byron, pleasure to have you here.
Pleasure to be here.
Yes, we're elbowing up here.
Coronavirus, all that.
It's quite a different atmosphere this year, you know, with unfortunately with the coronavirus that's come up now, a lot of precautionary measures being taken, and you know, we'll see how the conference plays out here, but it seems like, you know, people just be more cautious. So
Absolutely. I mean, I had no trouble crossing the border, you know, no lines anywhere. The hotel upgraded me. Actually, I waited until late to make my hotel reservation. They even had rooms, and then I got to the hotel and I was like, we'd like to upgrade you. And I'm like, well, if you insist, but okay, you know. So
that's perfect. Well, hopefully.
It's a sign of the times.
Yeah, absolutely. I mean, I mean, we'll have plenty of time to talk about that in a few moments, but yeah, it's quite interesting just to see how that's had an impact here, and we'll find out in the next few days. But talk about the mining sector. You know, how would you characterize as a whole the mining sector and throughout 2019? You know,
I thought it really was rolling along quite nicely.
Yeah.
I mean, it's a stock picker's market. It's a company-specific market. You have to be careful all the time. But a lot of really great companies became even better companies. A lot of management teams became better management teams. People were able to raise money in a prudent way. You know, I mean, you never get everything you want. Everybody wanted, you know, higher prices, higher share prices, higher. It never happens that way. But a lot of the really good teams raised money. And then in terms of companies that were doing good things, a lot of good companies that are here today at PDAC, of course, they had splendid success in terms of, you know, what's the downstream demand. I mean, you know, things have obviously changed in the last week or so, virus-wise, economy-wise, you know, the global bubble-wise. But I think in 2019, the mining industry set itself up very nicely for a good 2020.
Right.
Not anticipating, of course, you know, the virus issue and the popping of global bubbles, which in some respects, I mean, it hurts while it happens, but in some respects, it's probably way overdue to pop a lot of bubbles. Right. Not this particular way, not with the virus, but popping bubbles is a good thing, and resetting values. And I think in the last week or two, and I think in the next coming weeks, we're going to see a lot of things rediscover their inherent value.
Right. Yeah.
At the end of the day, because this is a mining conference and it was a mining question and I'm a mining kind of guy, at the end of the day, I think that the good mining plays are going to be even better, and their products and their output and what they deliver is going to be even more valuable. It is a phenomenal opportunity, although do not just dive into the bath of fire just now.
Of course,
be careful, obviously.
Yeah, because it's been a very, very interesting year. 2019, you saw a lot of M&A. You know, we had a very good run in a lot of the stocks, seeing a re-rate of the valuations, and this last week, it kind of seems like there's another opportunity to get in, to kind of dip in. But, as you said, you have to be kind of a little bit patient.
Last week we had a major sell-off in the price of gold. It had gone up into the mid-1600s, even high 1600s. And then it really slammed down on Friday the 28th of February. It's not that there's anything wrong with gold. What was wrong with it is that a lot of people who held gold had margin calls and they had to sell it. It was the end of the month. It was the end of the week. It was the end of the week when people actually began to realize, this virus thing might have something to it. It's not just another common cold. A lot of people had to sell their gold, and price went down, and it could go down even more. We saw this in 2008, where gold went from $1,000 down to $750, a 25% retraction. But within a matter of 2 months, it was back to where it was before. Gold was hit because you can sell it when you have to sell it. There's always a market for gold, although, you know, the price will go down, but at least it's not going no bid like a lot of other things out there. And so price went down, price went back up. I think we're going to see the same thing here. Watch that price of gold, watch those gold indexes, watch your favorite companies as they do this swoon. And then if you've got some spare cash hanging around, you know, it's going to be buying opportunity big time in, you know, as things evolve, in my view.
Yeah, and especially with the gold price right now sitting at around 1580.
Yes.
You know, we saw it as high as 1680 just a week ago.
$100 less in a week. Is that natural? No. That is a manipulated market. That is a market in distress. You know, again, be careful of, you know, jumping into the lake of burning fire just now, but it's gonna work out.
So this year, then, what do you think about the gold price? Do you think it'll still, we saw a lot of stability in the last year where the prices continue going up, and now with the coronavirus and everything, I mean, what do you see for 2020 in terms of the price to remain stable, or still a lot of volatility?
Well, short-term volatility, obviously, with the market gyrations. I mean, gold is going to be a reflection of market volatility. There's just no way around it.
Yeah.
At the same time, look at major macroeconomic volatility across the world. Every currency, the dollar, the yuan, the euro, the British pound, the Japanese yen. I mean, every currency is a reflection of the economy in which it's used. The euro is a reflection of the European economy. The yuan is a reflection of the Chinese economy. Well, what's every economy doing right now? It's all tightening up. It's contracting. And so, what has to happen macro-wise? Macro-wise, the central banks have to open the spigots, pump out the currency, remonetize, liquefy the economy. What does that do for the price of gold? It means the price of gold is going to be going up. And I think that long term it's good for the fundamental price of gold.
Yeah. Well, most likely the case is that they will have to do something in the next few weeks here. If the market still suffers this bloodbath, they're going to have to reduce their interest rates by a quarter point, half a point, whatever it may be.
That's what the Fed said on Friday afternoon.
Yeah. Oh, there you go. Yeah. So it's going to be very interesting to see how things play out then. I mean, so then going from there, I guess this goes to the next question in terms of at the point in time that we are in right now in the market. Mm-hmm. What do you look at in terms of variables for mining companies for when you invest now? Is it still the same as when we talked last year in terms
I like to think
there's
a certain consistency or a method to my madness. I mean, you look for the asset, the geology, you look for the jurisdiction, the area where it is, and everything from the legal environment to the social license. You look at the management team and the technical team. What are they doing? I've visited many dozens of sites, including Minaurum, for example. It helps to get out there and kick those rocks. But you're looking again at you're looking at capital discipline within the company, and you're looking at that sense of moving things down the track in terms of the technical team. What they're doing, what's the plan? Yeah. I mean, sometimes the best plan is to throttle back. Don't spend all your money drilling holes. Yeah. I've met a lot of management teams, technical teams in the last year that made themselves much better by not drilling as much, but by thinking a lot more, taking what they already knew and just sitting down at the graphic display module and just using the software, and remodeling this, remodeling that, revising this, and it's astonishing some of the upgraded models that you're seeing. They've added immense value just by crunching software, processing the data that they've already paid for. Right.
Does that change somewhat in terms of jurisdiction, though? Because say, assuming this virus keeps spreading, and there's certain projects in certain jurisdictions, right, where they could be exposed to this. So does that affect the way you look at companies then going forward, or I guess it just has to play out? You have to wait.
Well, in terms of the virus issue, I mean, that's something that's going to play out. I think that a safe jurisdiction is still a safe jurisdiction.
Okay.
And again, much of the work I do is in Canada or the Western United States, or I'll say Northern Mexico. And these are all North America. It's North American medical standards. The U.S. and Canada, obviously. Mexico actually can deliver good medical care. If you're the right person in the right place. So in terms of that, I'm not about to bail on any particular project just because it's in the wrong zone, so to speak. I might be speaking differently about other countries, other continents, even. But
interesting. So our favorite topic now, just a couple comments.
Yeah.
The U.S. election. How do you see that play out this year?
Well, obviously, Trump's running. I've believed. I actually wrote about this a while back in one of the newsletters. I was never all that comfortable with Trump hanging his his success or failure on the stock market. Because when the stock market's going up, it was a bubblicious stock market. I mean, I think anybody who follows the stock market knows there's been a bubblicious, market. So now something comes along and pops it. I mean, politically, everybody's going to try to pin it on Trump. I mean, everybody who sneezes and gets the cold it's Trump's fault. That kind of a thing. That's politics. On the Democrat side, I mean, we're quickly winnowing the field. We've got Bernie with. I mean, he's the senator from Vermont. He's not really from Vermont. He's this old hardline socialist from Brooklyn. Draw your own conclusions. Exactly. The guy is a hardliner, and he doesn't fit the last 225 years of American history. I mean, he's there. He's a citizen, born and raised, et cetera, et cetera. But in terms of where he's coming from philosophically, he's not part of the mainstream. You look at the other players. I mean, Joe Biden is just walking Alzheimer's, if I may use an expression, and Michael Bloomberg. I mean, he's just trying to do a leverage buyout of the Democrat Party. I mean, he's just I'm going to throw millions and millions of dollars, hundreds of millions on the table. That comment he made at the debate a week or so ago, where he said, those 40 new congressmen, I bought them. And then he quickly corrected himself. I'm sure you did, pal. And so I obviously the political dynamic is very charged. Getting away from that though, whether Trump wins or somebody else wins, we're still in a world where where we need copper. Gold is valuable.
Correct.
If we're going to do electric cars, you need lithium, you need rare earths, you need cobalt, you need nickel. And so the fundamentals of supply and demand in the global economy have not changed.
Yes.
And they are what they are. And so it's really just a question of whose party's going to control the House, whose party is going to control the Senate, who's going to control the White House, and who's going to make all those political appointments, who make all those decisions on permitting and air emissions and water emissions and all that sort of stuff. That's it from a mining perspective.
What do you think in terms of markets going forward? Are you a bear or bull?
Am I a bear or a bull? Well, I'm both.
Okay.
Because we mentioned earlier, what we're seeing right now is a massive reset of valuations. A lot of bubble things are going to be not bubbles anymore. A lot of underappreciated things are going to be more appreciated. Entire supply chains are truly being questioned. I mean, Trump started it with his tariffs on China issue, and that's been 3 years in the making, so to speak. But I mean, I think what people are waking up to is that, what, you mean 97% of our antibiotics come from China? Are you kidding me? What, you mean that 10% of an American-made car it comes in a container from China? And if even one of those containers don't show up, we have to shut down factories in Michigan? I mean, people are going to rethink that quite hard. And so I see supply chains migrating out of China and migrating back into, if not the U.S. and Canada, at least into more Westernish type countries, at least countries that are not China, just because of the insecurity of the supply chain at this point.
Of course, interesting.
So there's going to be a lot of stock market revaluations. The days of chasing momentum are over. The days of the unicorns are. The unicorns are seriously an endangered species in the tech side.
Of course.
And we're going to deflate a lot of bubbles, and we're going to pump up a lot of things that have been underappreciated for many years.
Exactly. Fundamentals coming back to the market, hopefully.
I think so. Back to basics.
Well, thank you so much, Byron. I really appreciate it. If you want to find more information of the Whiskey and Gunpowder letter, you can contact Byron, and we'll leave the description below, and you can ask him any questions, okay? So thanks so much.
Agora Financial.
Agora Financial,
AgoraFinancial.com, and you'll find your way to Whiskey and Gunpowder.
Perfect. Thanks, Byron. Appreciate it.
Thank you.